Good morning. You're watching Businessworld Live. I'm Jes Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. The Asian Development Bank has urged the government to expand COVID-19 testing and contact tracing outside Luzon after it found that testing laboratories are concentrated in the island and with levels below WHO recommendations. In a report, the ADB said that with emerging COVID-19 variants, it is vital that the government expands testing capacities in the regions and further collaborations between the private and public sector should be pursued. The lender also said that contract tracing done manually by LGU remains inadequate. Last year, the ADB approved a $1.5 billion loan to the Philippines to partly fund the government's pandemic response program. Meanwhile, the Philippines ranked last out of 121 economies in Nikkei Asia's latest COVID-19 recovery index. The index ranks countries based on infection management, vaccination rollout, and mobility. The Bangko Sentral is proposing to initially align the reserve requirement ratio of digital banks with that of thrift lenders, which currently stands at 3%. In comparison, the RRR of big banks is pegged at 12%, while rural lenders enjoy a lower rate at 2%. In a draft circular, the BSP said it makes sense to impose the same standards and requirements as both digital banks and thrift banks are targeting the same market. Additionally, both are offering similar financial products, but BSP Assistant Governor Lynn Javier said the regulator may adjust the RRR for digital banks is needed to stay in line with its price and financial stability objectives. Under the same draft circular, digital banks will be required to comply with all prudential requirements set for the conduct of business. These include requirements for corporate governance, risk management, outsourcing, consumer protection, and anti-money laundering, among others. Okay, it has been 4 minutes since the bell rang for the main index here. Let's try to check at how the main bourse is doing so far this morning. Not so well after increasing by as much as 1.1% yesterday. But again, the index still today above the 7,000 level, even as it posts a decline today, at least so far in the session this morning. Muted decline at that, in fact. But still in the red here. Yesterday, we did see that shares surging. That's on the back of cases falling to its lowest on Tuesday at 9,055. That remained low even on Wednesday at 9,868. But then, of course, we have to contextualize this by saying, that there's also been a rapid decline in COVID tests being conducted across the country. Christina Ulang of First Metro said that there's growing optimism that the economy might reopen as cases slow down, and add to that as well the risk on mood in offshore equities. Telcos were all the rave on Wednesday rather, with Globe adding close to 10% yesterday. Converge also pushed higher by its inclusion in the FTSE ASEAN Stars Index. Let's see if that rally extends today. Looking at our leaders and laggards here, true enough, you have PLDT, Telco Giant still in the green here, up by 1.5%. Also, however, on the other hand, you have Globe this time after that record surge yesterday of close to 10% rather. It's now down by 0.8%. You also have a number of our lenders enjoying gains so far in morning trade. You have BDO up by 1.5%. There's also Security Bank gaining close to 0.7% after that report on the BSP considering a 3% RRR for digital banks. Also, you have ICTSI, something to be looking out for today. That's after it said that it caught an additional 7.15% stake in Pakistan International Container Terminal. That's for 7.8 million ordinary shares. That's going to boost their ownership in PICT to 71.68%. Shares close lower on Tuesday. Let's see how the stock is going to fare today. But still, of course, the most remarkable outing, at least so far today on Thursday, would have to be FGen. Look at that. The stock continuing its decline today, down by as much as 5%. This after It's reports that it's going to be dropped out of the main index beginning October 11. This as its float was reduced after KRR's tender offer and the stock was completed. Again, KRR acquired a 7.3% stake in FGen, reducing FGen's public float to 18.7%. Again, FGen today down by as much as 5%, now pricing at 28 pesos and 50 centavos. Today, the stock that will be replacing FGen is going to be Vulcan. It did surge to a record high yesterday. Looking at the stock today, it's continuing its increase here. FGen is up, get this, 18%. With just 7 minutes into the trading day, the stock is now at 36 pesos and 95 centavos a piece over a 3-day period. Vulcan already rose by close to 27 and 0.6%. Now, lastly, let's have a quick look at Megaroll. This after it reported it's going to build a 98 billion peso business district in Bulacan. That's going to cover 85 hectares of land along the North Luzon Expressway. It's going to be called North Wind Global City. That's going to be 20 kilometers away from NCR. There's going to be a station of the Manila Clark Rail Project in the development. It's going to have high-rise condominiums, hotels, malls, and offices. It's going to be developed within 15 to 20 years. Kevin Tan, Megaroll's chief strategy officer, said it's going to put Bulacan in the global business map as they envision huge multinational companies to operate there. Looking at how Megaroll is performing today, it finally bucks that sell-off has been experiencing over the past 2 days. Megaroll now at least at 1.7% at 2 pesos and 95 centavos a piece. It's the 7th day of filing for certificates of candidacy for the 2022 elections. First to file today is Alexander Encarnacion, an independent presidential aspirant, while another presidential hopeful, Jeffrey Roden, also filed his COC today. The Kasama Party List and the Nurses United Party, meanwhile, filed their certificates of nomination and acceptance. Carl Balita also just filed his COC for senator under Isko Moreno's Aksyon Demokratiko slate. And a certain Rowena Awang also filed her COC for senator at the local level. And Kalusugan Party List representative Mike Defensor already filed his COC to run as mayor for Quezon City. Recall that Bongbong Marcos and Ping Lacson have both filed their COCs for presidency yesterday, while Tito Soto accompanied Lacson to file as his running mate. Meanwhile, Vice President Leni Robredo is expected to make a big announcement at 11 a.m. today regarding her political plans for next year's elections. Pork imports from January to September is already 72% higher than total imports made for the whole of 2020. That's to the tune of almost 440 million kilos, which is also 261% higher than pork imports during the same period last year. Spain was the country's largest source of pork imports during the 9-month period, followed by Canada and the US. Recall that President Duterte issued an executive order that increased the minimum access volume for pork meat in 2021. This is part of the government's effort to bring down prices and stabilize the supply of pork in the country. Apart from the lowering case count in the country, investors have been cheering that slower inflation print in September or August. But is that a one-off or has inflation already peaked? Let's find out from ING Bank Manila senior economist Nicky Mapa. Good morning, Nicky.
Good morning. Thanks for having me.
All right. So how much of a surprise was that easing coming from the 32-month high?
Yeah, it was a bit of a surprise. Market had expected a 5.2% pickup in prices, but the 4.8% print was a bit of surprised the most market players. Even the BSP just coming in right at the lower end of the BSP's forecast range. I think the reason, the fact that we're seeing inflation move very rather wildly just shows the supply side nature of this recent spike. Whenever you have supply side bottlenecks, it tends to throw off some of the market analysts. And then once those supply side bottlenecks have been addressed, those price pressures fade very quickly, and that's what happened for the September print. So yeah, I think going forward, we'll likely just have to be watching for these supply side pressures. Some of them have become very apparent. We're looking at global oil prices, global energy prices, in particular, really moving north as the world economy, countries in Europe and China
Mhm.
are scrambling to secure energy supplies ahead of the winter.
Okay, given that as well, again, you mentioned elevated prices of oil due to higher demand, a lack of supply as well from the OPEC, and increased economic activity. How much of a risk is that to inflation?
Yeah, I mean, we expect the October inflation print to stay quite high, close to 5%.
Mhm.
So we're not out of the woods just yet. However, due to base effects, we can expect price pressures, or at least the headline inflation print, to come off in November and December. If you remember, this time last year or late last year was when we saw inflation pick up considerably going into the fourth quarter of this year. So base effects, I think, will help keep headline inflation at least from really flying off to about 5% handle in the coming months.
Okay, but we just reported, of course, pork imports on a record high here. Would that be enough to at least temper price burdens?
Yeah, I mean, if you look at the September number, the headline inflation number, as well as the components, we're really starting to see meat prices come off just a little bit. This, I think, is two factors. You have the base effects from last year, as well as the increased pork imports coming in to help stabilize supply, which has been decimated by the African swine fever. Domestic hog raisers are having a hard time with that.
Now, of course, the BSP has been constantly saying that price pressures are temporary, but are the risks getting more and more entrenched?
Yeah, I mean, I think they'll have to start dropping the word temporary very soon, because it does look like we're entering a phase in the global recovery wherein price pressures, at least on the commodity side, supply side pressure will be around for quite some time. As the global economy reopens, it's going to be very difficult for not just the Philippines, but across the globe to really catch up with the supply production. For example, if you look at oil prices, even if we wanted to increase production today for LNG or for crude oil, it takes a bit of a while before we start to put in the investments to increase capacity. So it's not like we flip on a switch and we easily get back or we easily increase supply. So for we might be seeing elevated prices for quite some time, maybe moving into next year.
Okay, now is the pressure for the BSP to hike rates already off, or for how long can they afford gold rates?
Yeah, well, I think they dodged the bullet for the September number. There was a bit of pressure on them to hike sooner rather than later. But I think the expectation that the BSP will try to keep policy rates accommodative for just a bit longer to give this recovery a bit more juice with regard to picking up from the recession that we're currently in. So I think the BSP holds off for just a bit longer. Maybe a rate hike is we have penciled in a rate hike by second quarter next year. So that's a good 3-4 months for them to keep the tap open for just a bit longer.
Okay, the expectation is for them to take action at least by mid 2022. Now let's shift to a different topic now. Nicky, your thoughts on the Nikkei Recovery Index ranking the Philippines dead last out of 121 economies?
Well, that's very unfortunate. It mirrors other rankings that we figure in dead last. We've always contended that the economic recovery moves hand in hand with the public sector health recovery. So we need to really get a hold of this virus. I think you noted earlier that cases are coming down, but this might be a function of lower testing. So we have to figure out why we're testing less at a time where positivity rates are quite high. But I'm not a public health sector expert, but I do know that if we are able to contain the virus, restore the public's confidence in going out and shopping again, then that's the only way we can really ensure that the recovery that we have is long and lasting.
Okay, talking about going out and shopping again, of course, the capital has transitioned to the alert level system. The pilot run extended until mid-month. How should these at least affect growth levels for the last quarter of the year?
Yeah, I mean, if you go out and then we can go out just a little bit more, Yes, it's better than what we saw in 2020, but it's still very far from what we remember in 2019. So, gone are the days of rip roaring household consumption. Two factors to that: you have people still unsure about how prevalent the virus is, and secondly, job losses have been quite substantial over the past few months, and I think drawdowns on savings has also been quite considerable. So people, those who have kept their jobs might have dipped into their savings quite a bit, so they're not going to be in the mood to spend all that much. Maybe some revenge shopping, but it's not going to be the same pace, or vigor that we used to see back in 2018, 2019. So I'm not looking to a very sharp rebound in GDP. We will have unfavorable base effects kicking in. So maybe a 3.7% GDP expansion in the third quarter, followed up by a 3.9% expansion in the fourth quarter of this year.
So that how's that going to affect your overall model or picture for the full year 2021?
Yeah, unfortunately, full year 2021 is below, at least for me, below the government's low end
Mhm.
forecast. So I'm looking at a 3.7, 3.8% full year GDP output. And yeah, it's lower than the government's 4 to 5% growth target.
Okay, one other thing we have to be looking into, of course, it's already election season. That's already heating up. How's it? Are we expecting election spending to be at the same level that it was back during past election years, pre-pandemic?
Yeah, I don't think it will be. And I think the BSP recently released a study on this, and they're expecting only a zero point 0.5 percentage point bump up to GDP next year, roughly half of what it usually is. And I agree with this on two fronts. One is that the massive campaign rallies that we usually see in previous election years, not likely to happen because of social distancing and what have you. Secondly, the real boost to, or a substantial boost to past election years has always been public construction. As maybe congressmen or our local officials are trying to roll out substantial infrastructure projects before they step down or before they run for re-election. So I have seen a bit of a pickup in public construction over the past few quarters. However, I don't think it's going to be once again at the same pace that we usually see during an election year, given the sluggishness of the economy and social distancing guidelines.
All right, great insights as always. Thank you very much for your time this morning. Again, ING Bank Manila Senior Economist Nicky Mapa. Thank you, Nicky.
Thank you. Take care. Stay safe.
And that's a first look into the business day this Thursday, October 7, 2021. Catch Business World Live for the market close at 3:15 p.m. today. I'm Jes Delos Santos and BR1 News. Mask on, wash hands, and stay safe, Philippines.